intraday most of those sessions. I want to bring in Yardeni Research President at Yardeni. And Ed, for you, what's been the most impressive thing, like about Monday and Tuesday, that sort of turn that makes it maybe potentially the bottom?
Well, the week before, the bull-bear ratio that I follow, Investors Intelligence puts out on a weekly basis, had dropped significantly. As it turned out, I anticipated that it would continue to drop, and it did. It went down to 1.1 last week. Usually, a reading around 1 or lower is a clear buy signal, and I thought that was kind of close enough. Sentiment, in other words, was very bearish, which from a contrarian perspective tends to be bullish. And then I called that bottom on Monday at the end of the day on Tuesday after the market closed. Mm-hmm. We had a huge rally on Tuesday, and I concluded that the market was right to anticipate that the president would be announcing that he would establish an exit ramp for the war, and that's what he announced on Wednesday. Now, of course, that could change, but at least negotiations are going on right now. There's some sort of ceasefire in place. So, yeah, I think we might have made the low for the year on Monday of last week.
Yeah, to your point, we're going to the weekend. Hopeful there will be some movement on Iran, reopening of the Strait. And it's interesting because you have fun with the headline with Yogi Berra, right? Deja vu all over again. Yeah. But this reminds me of the tariff tantrum, right? We get different announcements. Yeah. They're up, they're down, they're sideways, they're suspended. And even to this day, I'm not even sure where we stand with tariffs. Is there a point where the noise itself starts to filter, kind of fade away?
Well, in some ways, I think that's a very important point, because I think everybody knows by now that the history of geopolitical crises, they tend to be buying opportunities. And because everybody knows that, when you get a geopolitical crisis like the one we've been living in, investors are actually not in a panic mode, but quite the opposite. They're in a buy in the dip mode, because they know that historically geopolitics, the market looks ahead, and the market looks forward to this geopolitical crisis being resolved. So I think that's what we're seeing here. Also, as you pointed out, there's kind of this ingrained buy on the dip mentality, right. And I think what happened last year definitely sealed that in, because that was a great buying opportunity, and so people don't want to miss the next one.
Now, you also wrote yesterday about healthcare showing some signs of life. That's a Wall Street favorite. Everyone's kind of like, in the last year, honestly, particularly United Health and some others. What are you starting to see there?
Well, I'm starting to see that it's turning healthier. I mean, we know that the earnings pictures is really quite good, but the industry, as you said, is typically a favorite of Wall Street when things aren't going very well. Right. But on the other hand, there's some very powerful growth stories there, particularly the large pharma companies that are looking to buy smaller cap stocks, particularly in the biotech area, that could refill their pipeline, because a lot of their great products are going off patent.
Hey, I've got just a minute to go, but a story broke today in the Journal. Wall Street is building tools to bet against private credit. Now, I keep bringing private credit folks on, and each one of them standing firm. It's not a big deal, it's overblown. My biggest concern is contagion. If they want to blow themselves up, fine, but I worry about the collateralized debt obligations and what that meant for the entire economy and the entire stock market.
Sure.
How are you viewing this?
Well, I try to be data dependent, kind of like the Fed, and so I'm watching weekly data on bank loans. The banks are highly regulated, and they've shaped up their balance sheets and the way they do business dramatically since they were basically re-regulated following the great financial crisis, right, in 2008, 2009. And the loan numbers show that they're actually lending. So they may actually be looking for opportunities to buy some of these loans in the private credit system that are now being sold at a significant discount. So yeah, I'm in the same camp. I don't think this is a systematic problem. As long as I see that the banks are lending, I don't see a credit crunch for the economy or a recession.
Great stuff, Ed. Always appreciate you, man. Have a great weekend. Thank you.
Thank you. You too.